Right, we are back, and let's have a look. What do we have? All right, let's have a look at the market. OCGN, almost 30%. Yeah. Let's look at Coinbase. Coinbase is up. I don't know. I still feel like maybe it can go to 270 or 280, but I don't know. I've recently lost so many times to my patience, good occasions, but then again, uh, it's better always to be safe than sorry. So, one of the other things, I will follow up tomorrow now. Let's see how it turns out today. For 1 hour, it's not really clear. Let's see. No. Mm, I don't know. It sounds like it can still go down a bit. I'm not sure. It it moves up if the volume flow supports basically the stochastic usually. Of course, it's not a written in stone rule or anything like that, but anyway, at least that's what I try to do. Um, how is this one? Yeah. Anyway, let's have a look at this downturn. Baidu. Mm, really? JD. How is it on the 4 hour? Not really good in the 4 hour. Yeah. So Vertex, Simu. Let's have a look at Doi. Sounds like that it should go down for now, but how about day? So if it finds support along this line or along this 200 EMA, that sounds like a good entry point, at least in my opinion. So yeah, that's about Nintendo basically. Pins, man, pins. Yeah. Oh, what can you do? Let's see if we can have a short-term trade or anything with one of our forex pairs. This is actually getting to a good point. Maybe goes up for now. GBP. Yeah, there is a resistance there. So basically I'm trying to find something in the direction of the trade, some really short trade with high leverage. I'm trying to find something that is extended in the Bollinger Band against the trend. So exactly like this one. So Euro USD. Yeah, so Euro USD could be a trade soon. Could be, I'm not sure. It should come up here. There is 200 EMA. There is this, again, straight line here. So I expect this to basically be reversed. And as it is reversed, then I take this trade basically somewhere like this. And I will use leverage on it. Sounds good, Euro USD. Let's keep that in mind. Not this. Yeah, this is similar. I prefer Euro USD. Not this. Not. Yeah, yeah. Let's keep an eye on Euro USD for a bit. It is getting rejected by that point. I expected it to go a bit higher. It's not hitting that. Sorry for that. Yeah, let's wait a bit on this one. Let's go to our profiles.
Racing game, which I dumped literally
Yeah,
125
I was right
bucks
there
a
with you.
week. I mean, who's playing this?
Yeah, that's a good question. Well, when you ask who's playing it, you also have to put put things into perspective of where things are in crypto adoption, right? So we're kind of in the middle of between early adopters and kind of this massive institutional adoption of crypto as a whole. So as this moves,
The dude moves too much.
34-year-old male, an international audience. We're headquartered in Australia, to a little bit more of a broader reach.
I don't know. Just moves too much for my taste. Oh, sorry. Let's see. In 5 minutes, we have to be able to take a trade, I think. Let's check ADX, DMI, this. The trend really. It's not trending actually at all. I don't know now. To be fair, also the volume flow is not the correct direction either. But yeah. Let's see. Senior surgical 20%. It just went up. Yeah. BNGO 16%. Many of our plays are getting back actually. Not Jimmy. Yeah, BNGO. Euro USD. It went up again. Again, direction is not correct now. I don't know. Have Baidu here. This is a good range right now. What is Netflix doing?
Towards normalcy in Hollywood during the ongoing pandemic. We have Yahoo Finance's own Alexandra Canal here to chat with us. And Ali, definitely a different setting, different vibe to this year's ceremony versus years past and some of the other virtual ceremonies we've been seeing recently. But taking a look at the main event, the awards, who were some of the big winners there, especially in terms of studios?
You're right, Emily. It was definitely a very weird year. The coronavirus shuttered theaters across the nation, and that put a lot of those big budget blockbusters, it forced them to push back their release dates into later this year, some even into 2022. So it really was the time for streaming services. We had that Oscar rule change. For the first time, a movie could be nominated without ever having to appear in the theater. And we saw some streamers win big last night. Netflix, it entered with the most nominations, and it walked away with the most awards. 7 wins, led by Ma Rainey's Black Bottom, along with Mank. They also won a couple awards in the shorts category, along with the documentary My Octopus Teacher, which I thought was pretty neat. And then secondly, we had Disney. They won 5 awards. The clear winner of the night was Searchlight Pictures' Nomadland. Not only did that film win Best Picture, along with the Best Actress win for Frances McDormand, but we also saw Chloe Zhao win Best Director. And this was a pretty historic win for her. She is only the second woman to ever win this award. And beyond that, she's the first Asian woman to win the award. So diversity was very key here. It was the most diverse acting slate in the Academy's history. Of course, the Oscars has come under a lot of scrutiny in the past for being too white. Oscars so white controversy was not that long ago. But now we had a really diverse slate, although I do want to caveat that by saying only 2 out of those 9 non-white actors actually walked away with those awards, one being Daniel Kaluuya for his role in Judas and the Black Messiah, along with Young Jung-un, who won Best Supporting Actress for her role in Minari. And she had had a really cute moment, basically fawning over Brad Pitt. But other than that there weren't too many A-list moments that I usually look for with the Oscars. It sort of seemed like a very disjointed ceremony. Once again, we went hostless. I do think we need a host to help man the ship, to crack some jokes, maybe to lead us in a good direction. We didn't have that last night. We had no musical performances. That was all done in the pre-show. I think that sort of helps separate things a little bit. And in a break from tradition, we ended the show with Best Actress and Best Actress rather than Best Picture. And I thought that sort of fell flat with viewers as well. So we should be getting these ratings any minute now, but I don't have high expectations for that.
And I'm wondering too, Ali, of course, just seeing this event, the slimmed down event that it was, do you personally still see the Oscars as being relevant in a way? I mean, some have said that it's just really a prom for the Hollywood elite, or is there still some utility here from these ceremonies within the industry or from the broader public?
Yeah, it's a good question, because really what you can do is you can just go on your phone and get real-time updates. You don't have to sit through a 3 to 4 hour telecast to watch what happens. And really you want to watch for those celebrity moments, for those moments of levity. And usually you get that with a host, or if an A-list person is nominated for something. But last night, I just didn't feel that. I mean, of course, I think this was the year of the indie film. So I don't know a ton of people that went out and actually explored and watch these films like you might have done in years past. So it's hard to say what they can do to be relevant, what they can do to capture viewers. And there's also a larger question of whether or not they should try and cater to viewers. I mean, maybe you just want to keep it as is and you'll have the diehard movie fans tune in every year. But, you know, I don't know what the answer is, but last night it certainly was pretty boring for me. I don't know many people that sat through the entire show. I think, Zach, you and I might be the only two that actually watched the show in its entirety. But I get that, because it really wasn't that exciting.
Yeah, it wasn't that exciting. I did win my Oscars pool though, so I do feel good about that.
That's
and
why
you know,
you watched.
Soul won some things, so that's good. You know, still the best movie I've seen in a while. So Soul should have been Best Picture in my opinion. But Ali Canal, appreciate you bringing us that.
It did win Best Feature. There you go.
There you go. All right, Ali Canal, appreciate that. We're going to take another quick break here on Yahoo Finance Live, but when we return, digging once again into Tesla's earnings, about 7% implied volatility here. After the bell, which way could it go? Jared Blickreese is going to break down what you expect on the other side.
Yeah, so not really myself been in the mood of Oscar for a long time, but for those of you who are interested, lol, NFT horse racing, yeah, crazy things are happening now. And I mean, but I feel like I'm being a little bit how to say, being a little bit not updated with the new trends, basically because I don't like them. And this is one of those things. It is working for now. I actually cannot get my head around it, but yeah, I'm not the person who should tell you what you enjoy. If you enjoy it, then you enjoy it. And Overstock, where is Overstock? Okay, so Overstock is more or less in our path, so expect this to come and hit here. It is, but let's see if it stays here or not. What else? What else do we have? Let's go to eToro. Yeah. Yeah, that's true. eToro sent a lot of things about Tesla today. Let's look at Tesla. 30-minute. Okay, the graph tells me that it can actually come down. Maybe. but yeah, let's see. To me, it looks like that it can come down. How much would that be? 1%, not worth it. 1% is not worth to go against Tesla on an earning day. So UEXY. Okay, look at Jared.
Green around the world, except in Asia. That was overnight. Dow finally climbing back into the green, up about 7 basis points right here. S&P 500 up 1/4 of a point. NASDAQ close to session highs, up 2/3%. So nice to see NASDAQ making some gains, despite the fact that value stocks and cyclical stocks are really the leaders today. But you can see a lot of green here. Dark green in the lower part, that's Tesla. That's up 1%. I don't think we talk enough Tesla, but maybe we got time to go over some earnings later. Sector setup is still bullish. The only things in the red are those defensive sectors, staples, utility, healthcare. To the upside, those darlings, energy and financials, are in fact outperforming, but along with materials and tech and real estate. So all these guys here are outperforming. And we'll take a look at the travel sector, since we took a look at that an hour ago. And guess what? American Airlines building on its gains, up 4% there. Let's take a look at what it's been doing over the trailing month. And you can see if it pulls up here, yeah, it's still at the bottom end of its range, but finally breaking through this negative trend line. Looks like decisively, assuming that we hold these gains into the close, guys.
And Jared, you're right, can't keep away from talking about Tesla because, of course, the company is reporting after the bell today. What are you watching with that stock?
Well, I'll give you a couple of numbers here, what the street is expecting. So on adjusted EPS, the street expects 80 cents, and that's a range of 46 cents to $1.04 by Bloomberg consensus numbers. Also, revenue estimated to come in at 10.42 billion. Range there is about 8.2 to 12.34. Negative free cash flow is estimated to be 82.8 million, but still not going to be that big of a draw on their cash ending levels. Cash and cash equivalents estimated to end the quarter at $17.78 billion. That's a lot of cash. And in fact, we know they've been raising a lot of money at strategically valuable and maybe lucky times, or maybe they actually know what they're doing when it comes to raising stock. All right, automotive gross margin estimate, 24.2%. And I do have a note by Morgan Stanley. They expect Tesla, they expect it to frame its expansion among global product lines and assembly plants as a narrative for the remainder of the year. So all about expanding those new lines, the Y finally getting up those production levels. And so Morgan Stanley is raising their full year 21 delivery forecast by 3% to 809,000 units. They did that in a note last week. And they're saying Tesla's immediate priority is to expand capacity and industrialize its EV, quote, hegemony before the market gets too crowded. I'd say the market's pretty crowded already, guys.
Yeah, it's looking that way. And Jared, a bit of a natural pivot here as we talk about Tesla, since their Bitcoin move to add it to their balance sheet, to check in on what's playing out with the cryptos today, since we saw a bounce back. And, Ether holding onto those gains too. I think Bitcoin dominance taking a bit of a leg here when we think about the strength we've seen in the world's second largest cryptocurrency.
Yeah, not only Ether, we're seeing some gains across the board here. I'm going to switch to an equal weighted view where you can really gauge the performance, but let's still take a look at the trailing month here. And lots of gains. Well, Doge is the outperformer. That's up 400%, but even Ripple up 121%. So the other coins, the altcoins, definitely playing a game of catch up here, as they have been doing. But we got to check out the price action in Bitcoin overnight. And that's Tesla, not looking for that. Here we go. Here's Bitcoin. We had what's being called the China whale, the Chinese whale. Somebody was selling $200 million worth in the early morning hours. That accounts for this breakdown you see down here. And the fact that we cleared this level, 48,000, but managed to bounce right back up, I find that constructive. It looks like that may be a lower bound. But having said that, I think we still have to chop around for a while. Let me pull up a year-to-date view. That's not going to be it. Here's a one-year view. Probably going to chop around for a while between 48,000 and those highs of 60, 63,000, and then we can start thinking about a breakout.
All right, Yahoo Finance's Jared Blickery, thank you so much. Up next, The Honest Company has set terms of its IPO. We'll discuss next after this short break.
All right, so if I just closed Asenio Surgical for myself, I actually think something that went 25% up, I don't know, it just didn't feel right to keep it at this level. I didn't have much in it anyway, but usually after such high movement, you might get a little bit bounce back. If it bounced back and then if it continues to levels like 1.76, I will buy more. If not, then I'm okay. That wasn't anyway a big portion of my portfolio anyway. I'm more interested in NNDM, BNGO. These are the ones that I am invested more. Jivo, how's Jivo doing? Jivo is this 7. Like I can see Jivo to go again to 10 or these kind of things, but again, too much movement today, so I'm not gonna buy at these scenarios. I'm gonna sell if I'm gonna sell. If I'm gonna do anything, that will be selling, not buying. What is this?
And it could be valued at up to $1.5 billion. Now, a couple of other details here about this IPO. It's expected to price between $14 and $17 a share, with the company offering a total of about 25.8 million shares in this IPO. Now, Zach, I thought this was pretty interesting news, considering the fact that we have been seeing this wave of IPOs die down a little bit, at least in April, as we head into the second quarter. I mean, we have the Renaissance IPO ETF underperforming the S&P 100, and I'm wondering what you make of this latest filing to go public here.
Yeah, timing wise, I mean, obviously it's impossible to time these things if you are the company. You kind of pray for the best, and if you want, you can delay. We've seen a number of companies delay these things before. But for this particular one here, Emily, I mean, we've talked so much about like the health and wellness trends, but when you dig into the growth numbers this company has in their S1, not necessarily eye-popping when you dig into it, and kind of the segmentation of their business. Of course, they got diapers and wipes, skin and personal care, and household and wellness. There are 3 categories there, 63%, 26%, 11% respectively across those 3. But overall, revenue of just 25.6%. That's the growth we've seen in terms of top line, from 235.6 million in 2019 to 300 million in 2020. I'm not sure necessarily how many people might get excited by growth numbers like that. When you think about the long-term run here of being an early entrant to the health and wellness space, people know the brand. People know Jessica Alba. So, I mean, if you believe in that trend line, even though the growth year over year might not be all that.
So that's Jessica Alba's beauty things.
I think that's a good point. But I mean, to your point too, just about the future growth prospects for what this company actually sells. Of course, it seems like we've seen the peak consumer spending when it comes to packaged goods. If we think about a lot of these consumer packaged good companies actually underperforming the market so far for the year to date in anticipation of people spending more on services. I think it does, Zach, to your point, beg that question of how much further does this company have to run, at least in the very near term, as we head out of the coronavirus pandemic.
And even in the last 3 months, their growth slowing even more to just about 8% to 11% over those 3 months ended in March compared to last year. But we'll see how this goes. I mean, obviously, the $14 to $17 per share range could change, and we'll bring you updates as we get them leading up to the IPO. But exciting nonetheless, always to see one of these companies, especially celebrity-backed companies, to see how they perform on day one of trading. And we will definitely have that for you here. That'll do it for Emily and
Yeah, so this one. So actually Alibaba doesn't look like trending now yet. So despite the volume and the stochastic RSI in the same direction, still I wouldn't call this a good opportunity. So for those of you who are asking, I don't think it's a good time for a trade. For investment, 100%. I think Alibaba is definitely, like, Alibaba and JD are number one priorities for me in Shanghai exchange. These are the top two e-commerce, and they're the giants. I love these two, and I know that they had their problems recently, but they're just too good to be struggling. Let's have a look at JD again. By the way, for JD, I'm invested in the Shanghai exchange one, not in this one. Sun W shares up 8%. Yeah, many things are up today. So when we look at JD, it's not really looking that it's gonna have a bull run yet. I still think this is an amazing opportunity, in my opinion. I might be wrong, but like to the all-time highs, like it has at least 35% gain. So it's just too good, and this is a company that has almost 20% gain estimated for the next 4 or 5 years. So extremely good at growth, and I think it had really like beat on earning for a while, as you can see. So I'm still bullish. If I can, I will buy more of this. I don't know. I still feel like this could go down. I mean, but I'm not sure. I feel like if it goes to earning, there will be a run before earning, and the earning is actually on 10th of May. So we have still time before actually getting into that trade, but I expect this to come back. Maybe I'm wrong, but if it comes back, then I buy more. So yeah, 4 hours, again, this thing should go down, I think. And do I want to buy anything here? Yeah, let's remove this, and bring back the volume. Not clear. Let's can see that this goes up. I can see that. But it's not an excellent opportunity, honestly. Generally, I believe that this is the Korean e-commerce. I think it's okay. It can get to 50 again, but yeah, 5% here. You have 11% here. So it's a good opportunity, but again, they have a rival in Korea. I forgot their name. I don't know. I'm not 100% sure, but this is long term a good investment. I think the e-commerce is growing in different countries, and if you can find opportunities like this one in countries with good situation. I mean, for example, I think Jumia is gonna cover Africa and especially the countries that are wealthy within Africa. So that's a very good case. Then you have, I think, was it Ozon in Russia. Then there is this Coupang in Korea. Sorry if I'm butchering the name, but this is also another one that is, in my opinion, good to take. And what else? Yeah, these are I guess they have really good growth prospect in front of them because again, buying online still it's new. Not everyone buys yet things online, but they will get there eventually. So yeah. So what else do we have here? BNGO, what it is doing? Yeah, not a buying day at these rates. I actually think you will find a lot of volatility despite the fact that I guess most of company will beat earning, uh, but because people are a little bit worried for afterwards, you might get not great reaction after earning. Even if you have a beat, I'm not surprised if I see things to go down. Okay, Square actually is looking good to go back. I honestly wanted to wait for this range 214 or 215 to be filled, but this doesn't look like it is gonna be filled. Let's look at 4 hour. This is 6th of May. Okay, so a Square for me long term, like in the next week or two, I expect this to come back to this range. Just that I don't know if it's gonna do that or because both of them are about to just go up. I will wait a bit. But you know, when there is situations like this, and since this is already at this 50 or 20 EMAs, if it jumps quickly. At least I think like that. So, I don't know. I still wait. Baidu, NTDOI. It's 71 now. Yeah, let's see if it goes up. How about our Home Depot? No. Yeah. Crane shares, Overstock, beat, 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 beat. Yeah. Recently they were good. I actually, as I said, I thought that this will come down and then goes back. And I don't know. It looks like that is the case for now. These are both moving up about 4. Yeah. Let's see how is overstock today. It's not really moving today. How much do I gain? This is almost 15. And this one is 7. 7.5. So this is almost, let's go. So I think I'm gonna take this trade now. This is 30 mean. I can wait for this to come back and then how about 15? Yeah, so I can wait for this. This is this point. I thought this will be something like this, honestly. But yeah, let's wait for overstock. When it comes back, then it comes back. Let's see. So let's go something else. Let's look at let's have a look at Mara. No. How about 4 hour?
I'd like to ask, Doctor, your thoughts on the younger set being vaccinated. I know that Pfizer is now looking at, I believe, people 15 and under for getting the vaccine. Do you have any idea on a timeline? And also, how can we best protect those young people, especially, for instance, in my family, we're vaccinated except for our youngest because she's not yet able to get the vaccine. So what can we do to protect them?
So, yeah, thanks, Alexis. I think families are at a very interesting moment in this pandemic because you have some family members that are at higher risk, i.e., that some are vaccinated, some have kids. I'm in a similar boat. I have 3 kids who are under the age for vaccination. As they continue to study, as we're seeing with the Pfizer and Moderna, they keep studying, are able to study younger age groups. I think as time goes forward, we'll start to see that the vaccine will be safe in children as well. They often have really good antibody responses as well. And I know maybe vaccine deliberators might say, well, the risk of a child getting COVID-19 or a serious case of COVID-19 is small. But there is this multi-inflammatory syndrome that happens in children, which is also small but not trivial. And so I think it's important, and we still don't know what long-term effects are going to happen with kids. So, advice that we would give, the CDC just came out with recommendations for children for summer camp. They're recommending, kids should be outside, ventilated as much as possible, that they should be 3 feet from one another, and masked most of the time. And I still think that what you'll see with a number of families is that they'll have all of these different situations and circumstances compared to the person across the street, but they need to know what the community prevalence rate is, and then they need to protect themselves accordingly.
And doctor, speaking of the situation in India, what is the U.S. doing in terms of helping, and do you expect that eventually they'll be able to contain the COVID outbreak in the country?
Well, this is really, Sabine, this is a really concerning thing. The COVID internationally is at a real flashpoint. In my roles on the World Academic Council of Emergency Medicine and the American College of Academic International Medicine, we're speaking to our colleagues around the globe on a weekly basis to understand what's happening on the ground. If you look at how India got there, they had fewer than 10% of the population having received 1 dose of the vaccine and about 1.6% fully vaccinated. They began to relax measure. They had intersecting bubble events like political and religious holidays. That confluence could easily happen here as well in this country, depending on the community, because we have a large amount right now circulating the UK variant. When you look at the skyrocket that's happened in India, it's the B1617 variant that's there. It has a couple different mutations. These mutations are requiring more antibody to protect against infection. Now, we know that a person who has been vaccinated has a much higher level of antibody than even somebody with natural infection. So it's really imperative that we get vaccines out to the different countries. And I think it's really wonderful that the United States is providing oxygen, ventilators. But what's really, really critical is the vaccine supplies, and also making sure, and maybe this is, I think, a moral obligation. There's the recipes for the vaccines and the patents that I think the rest of the world could really benefit from. And so, India has the Serum Institute. They're able to produce tons of vaccines. I think what's lost in this is that India also provides vaccines for a lot of the rest of the world. And so Africa will not get vaccines because India right now will not be able to deliver vaccines to them. And so I think it's really important, because we've learned that if we have mutations and we end up having these variants, that if that happens in one part of the world, it's just as easily to be able to come over to us in the United States. So I think it's not just a strategic response, but a moral imperative to be able to do that. And I think that what we've learned from this process is that if we can help out these other places, we can actually save ourselves both like time in quarantine, as well as money, and as well as just the livelihood of the rest of the world. This is a global problem.
Indeed it is. Dr. Manish Garg, thanks so much for being with us and for those insights today. We appreciate it. Coming up, a preview of this week's Federal Reserve policy setting meeting and what it means for the bond market.
He was actually good. The guy was actually complaining that why people left him. Unfortunately, that's the case. People do not stay with you if you have. I mean, I'm not a popular investor. I don't want to be, but for those who are, this is a frustrating part, that they actually see that they lose people because they're just not willing to stay within a downtrend. But I think this is This is another good opportunity. Maybe I take this one as well. Moves both up, so let's go put at this trade. What else do we have here? SQ, you have Disney, CS. This is not really. No, I'm not gonna take this. PayPal. Let's see. This is, I don't know. No, I'm not really comfortable taking PayPal there. Let's see. Volume, what are the big market caps? Bank, Disney, Adobe, Shop, SKU, Activision. ATVI, let's have a look at ATVI. TVI. Not yet. Sam. No, I don't think this is Treasury Outlook.
Worst quarter for U.S. Treasuries since Q1 of 1980. So it was a tough quarter. Yields rose. Expectations were improving. The economy was reopening, and expectations for growth were really going to levels that we haven't seen since the 1980s. So that was reasonable. Now we're seeing a bit of a consolidation, a bit of a breather here. People are reevaluating what's going on. But we do feel that as we move through the rest of this year, the economy is going to continue to recover. The Fed is going to move closer to achieving substantial progress on their goals. And therefore, we are going to move to an even higher yield regime. So when I think about the 10-year Treasury at 1.6% right now, I think we could easily get to 2% as the year progresses and the Fed moves closer to achieving substantial progress, which then means they're going to start tapering their asset purchases.
And Kelsey, do you expect interest rates to pretty much stay steady? Do you expect the Fed will continue to be accommodative as the U.S. economy recovers?
So the front end of the yield curve will remain pinned. So when you look at the 2-year yields, for instance, that's going to stay very low, very consistent with the Fed funds rate, which is going to remain at zero for the foreseeable future. For instance, the Fed itself is forecasting that they're not going to raise rates until beyond 2023. So The front end will remain pinned, but where you will see yields continue to rise is in the longer end of the curve. And that's because although the Fed is going to remain accommodative, growth expectations are rising, and as you already mentioned, inflation expectations are rising.
Well, what do you think the impact's going to be on demand for equities if we do indeed see yields become a little more attractive and start rising to that 2% level? Do you think that's going to sap any of the enthusiasm for the stock market, or can the two things sort of coexist?
The two things have been coexisting, and although I am a fixed income expert, I will say that we monitor financial conditions more broadly. The risk-free rate has remained very accommodative, yields have remained low, and this is an attractive environment for risk assets. Even within the fixed income markets, we prefer to move out the risk spectrum into credit and high yield rather than staying in government bonds because of the improving growth outlook.
And Kelsey, what are you seeing in terms of trends with credit fundamentals tied to the recovery?
So one of the big trends that we've been seeing is although corporates are issuing a lot of debt, they issued a record amount of debt last year, and they're continuing to issue a lot of debt this year, what they've also built up is a huge pile of cash. So when you strip out that cash and you look at leverage excluding that cash, corporates are actually in a very good position. In fact, what we're seeing is that there are more rising stars than fallen angels this year, so lots of ratings upgrades. And we're also seeing that the default rate this year has been very low, and we expect it to continue to move lower as we move throughout the year.
And finally, what do you like right now in terms of sectors for this stock market? I mean, we're still in the middle of earnings season. We've got a packed calendar this week, but are there any areas in particular that you're either upping your exposure to or just staying away from?
So we're very comfortable with credit right now. Credit fundamentals are strong. As I mentioned, default rates are falling. There's more prospects for rising stars compared to fallen angels. So we're remaining overweight in terms of our credit exposure. And we're also staying away and being wary of getting too over our skis, particularly in the government bond markets. Because although the story for now is that we're far away from substantial progress, that the Fed is going to remain extremely accommodative, as the months go by and the economy recovers, we are going to be moving further and further away from that easy period of monetary policy and closer to a more tight monetary policy. And therefore, we will be experiencing higher bond yields, higher government bond yields, and we think you can get a more attractive yield and protect from higher rates by moving into things like credit and high yield.
Well, those are definitely good tips for investors. Kelsey Barrow, thanks so much. And coming up, the CEO of grocery giant Albertsons explained how he achieved an earnings and revenue beat. That's right after the break.
Yeah, so I'm looking at see if there is anything else. Overstock actually looks okay. So when we look at overstock, this is something I'm now a little bit interested maybe. So you have this area of basically there is this 50 EMA and more or less this line. What can we do here? I mean, when we look at the day chart, but the problem for me is that this is too soon. It is just too soon. And we might get actually get some rally before the earning, but surprisingly it doesn't show it to be like that. Well, anyway, up. Yeah, still wait. I still feel like that this can come down a bit more. Maybe add a bit to it. Do we have anything else? Tesla, you say? Haven't looked at Tesla. I'm actually not. I mean, it's not a bad price, but I should have got it here. It just got clearly bounced here, and then at this point I knew that this is going up, but it just never happened. I expected this to come down, but it just never happened. So sorry. So it's this one. I don't know. Dollar Fed, yeah.
That matter to them. For many, it's the fresh that we offer. For some, they've engaged in other parts of the store and we'll continue to keep them engaged in other parts of the store. We know the economy will open. We know that we won't sustain the same levels of sales as we did in 2020. But our challenge and our confidence is that we'll be able to keep a good portion of those sales so that we finish 2020 better than we would have without the pandemic. That's the game, Julia. And we're seeing that play out in our first several weeks of this quarter, like we imagined.
Mm-hmm. So you just mentioned 11 million new customers, 25 million in your loyalty program, which seems to be, as you mentioned, I think where the magic is. Digital also up 282% in the quarter. So talk to us about the importance there, and how much more spend are you seeing from a customer that does the more omni-channel or joins your loyalty program? How much more are we talking about in spend from those customers?
20% more, because what we find, here's the lesson we learned through this pandemic, that we always gave customers, when they shopped with us, more rewards around pricing and fuel if they shopped with us. And we found that when we turn e-commerce on, there's a segment of customers who are less sensitive to pricing or fuel rewards, but want that convenience. And so they spend more with us. Our best customers are those who spend money in our store and engage online. We think that's going to continue to grow. We are expanding our online coverage. We're adding more drive up and go locations, becoming more efficient and faster in delivery. And so we see a lot more upside in this business. We're excited about the incrementality that it brings to us, because we are getting these households to spend more with us when we open that convenience to them.
Vivek, this is Emily. I wanted to ask, were you seeing food prices increase at the start of this year? And what's your outlook for food price inflation later on in 2021?
Emily, we are seeing about 3 to 4% inflation. That's been steady over the last, I'd say, several months. And, we're predicting that that's what we're going to see for the next few months. But for planning the business, we take a conservative approach. We plan it at around a 1 to 2% inflation. And then if inflation hung around at 3 or 4 for longer, that only benefits somebody like us in our business. Now, here's something I want to make sure I reinforce this, that the inflation is being driven by the fact that there's a lot of demand. The average customer, I never generalize this, but by and large, customers have a lot of cash from savings and stimulus. And so there's demand, but there's not enough supply, which is what's driving a lot of this inflation. And I think we'll know in the next several months. The other advantage we have is we're a large business. We're a scale player. And so we can also negotiate better because of that scale. And secondly, we have a lot of business to take productivity from to the extent there's inflation and we cannot pass it through. So we feel really good about managing it through the year.
Well, Vivek, I'm hearing from you that the consumer overall sounds healthy, which is in line with what we're also hearing. One of the things you mentioned, I think it was on the earnings call or it was in the release, was that we're in the, quote, early innings of a transformation. And the grocery store has been pretty much the same, our whole lives, but we are starting to see the changes. So this is more of a big picture question. What is the future of the grocery store going to look like? And what are some of the changes that we'll start to notice as consumers?
Julia, the biggest change, our industry at large, and we certainly have pivoted, starting with what matters to the customer and how she wants to shop and designing everything behind in the business to serve that. I think retail in the past has been, we'll design the store and we'll kind of guide you on how to shop it. That's the old news. And so what you're seeing in grocery is a lot of digital enablement that's customer back so that we can give you what you want and we personalize prices and offers and the innovation for you. We keep your history so we make it easier for you to shop, and we bring it to you in many ways. And our belief is to give you more and more control. So shorter windows for delivery, give you a window whenever you want to come and pick it up in our store, and we'll keep finding new ways to do it. I think that's the biggest pivot in the industry. There's a lot of technology in our company, and you don't always see it. It's enabling the machine behind it and making it more sharp with that customer.
And you can catch the full interview with Albertsons CEO on our site, yahoofinance.com. Coming up next, what President Biden's first 100 days in office has meant to the stock.
Biden's first 100 days were not really good for the stock market. That is a fact. But I generally do not mind them taking some tax from those corporates. Just like what I think. But I understand people have different opinions on this. What is this?
I saw the guy that she was waiting for. He had no flowers in his hands and no time to say hello. If I were in his place, I know I would have kissed her slow. We are free to decide. We will love and
up 80% in his first 100 days. We can take a deeper look at that if we have time. But I want to get to the most recent presidents, the presidents of this century. And I'll go through the average from George W. Bush through Joe Biden. What we have so far, the average is up about 6%. And that average is not just these four. It goes all the way back to 1921. And it is skewed a bit by that FDR outperformance. So the median is only 2%. But I just want to demonstrate the point that it's all contextual. Presidents inherit certain problems as well as tailwinds, and these guide the market. And 100 days is admittedly a short period of time. Just going back to our...
He's right. He is exactly right. 100 days is too short.
Obama, who of course inherited the great financial crisis. So we'll get to him in a second, but I just want to outline what happened with George W. Bush. So he came into office, we had the dot-com bubble bursting, and so it was a rough go for his first few years. Of course, later on that year, he'd also have to deal with 9/11, but he managed to climb into the green by the end. Now, Obama was a different story. In his first 100 days, we got the plunge to the 666 S&P 500 low, but then the Federal Reserve unleashed QE, what I call QE bazooka or bazooka QE, and it was off to the races. And that was the longest bull market by some definitions in history. And of course, the market never looked back after that. Now, Trump really didn't have any huge drawdowns. There was a 20% intraday correction later in his term, I believe in late 2018, that December, we remember that. But he managed to finish with some decent returns in the first 100 days there. And then finally, Joe Biden. Let's check this out. Now, it's been off to the races since the election, and arguably you can also do the analysis from that standpoint, which we've done in the past, not with Biden, but we'll be doing that as well. And Biden so far is number 2. So he's up 10% so far. We'll have to see what happens into the end of the week. That's when the first 100 days terminates.
And Jared, what about that outlier, FDR? So the Dow was up 80% his first 100 days. What's behind that?
Well, I'll tell you what, it got off to an interesting start. If we could go back to the Wi-Fi Interactive, I actually have the Dow's performance throughout the year of 1933. Now, the Dow had previously been at 140, and it sunk to 40 points. Now, that is an historic low because that's 90% of the Dow being erased. When he was first in office, he closed the banks and the markets for 2 weeks. And that represents this little jump here, which is actually a pretty big jump because you can see after it filled the gap here back to the prior levels when he was, just before he was inaugurated, it was off to the races. Now, the market really wouldn't take off for years later, and we did have a double dip depression in 1938, but that's another story. Another interesting historical landmark, I think, is Ronald Reagan, 1981. That kicked off a huge, basically 10-year bull market. His first 100 days return were 2.8%, but you can see after that just kind of sank. And in fact, the market wouldn't bottom until the following year, 1982. So just kind of an historical example, a few of these here. I think the big takeaway for me is the president is not the stock market. You know, despite Trump, of course, who kind of brought things into the modern era. But Biden doesn't seem to be fixated on the Dow and S&P prices the way his predecessor is. So I think we're getting back to a situation where the market is more looking at the general economic backdrop as that is progressing and going on, guys.
Jared, absolutely. The president is not the stock.
Yeah, I mean, throughout the whole session, I loved Jared's session. He is just to the point, quick, really helpful, and smart guy with his comments, I think. So really love his parts. Good job, Jared. Yeah. Let's have a look. Still going down. So, that was for you. We're asking about what music this is. I put it both on Twitch and YouTube, so hope you like it. And yes, this is, or these musics are no copyright music, so copyright free, if I may say so. Actually, for me, one of the parts that is annoying is the Yahoo's music that they play between their sections. That is actually copyrighted, so I have to actually cut them afterwards after my when I actually publish the video. So. Yeah, this sounds like be nothing really interesting going on anymore. I mean, there are things interesting, obviously, but for a long-term investor, I'm not willing to buy. This will help me understand what I'm doing, actually. Let's see. Shop. I'm looking for a shorter term trade. Oh, that's good news.
Iceland's open right now. We've had our writers go, and when they crossed the border, the border agents looked at their vaccination cards, and that sufficed. So I'm assuming that that's going to be the case for the rest of the EU. And certainly the UK, hopefully May 17th, they're going to announce that Brits can holiday again, and hopefully Americans can visit. And I just will say this is great for tourism, but so many families have been separated for the last year with these onerous quarantines. So it will be really nice for people to be reunited with their families.
So some of the countries you mentioned, France, UK, hopefully we'll let some American tourists come in, Greece, we'll see what the situation is. So what does that mean for airfares and hotels? Is it really good? Are we finding really good deals out there? Or are hotels trying to make as much money as possible, as quickly as possible, and making prices expensive?
Well, no, so that's what's happening right now in Hawaii, Florida, Mexico. Hotels are at capacity and making more money pre-pandemic. You go to Hawaii now and you're going to pay $500 a day if you can even get a rental car. So if you're a bargain seeker, there's lots of sub $500 airfares to Europe this summer. My number one tip, the airlines now allow you to change for free. So if anything changes, except on basic economy tickets. So if you're going to book a speculative ticket to Europe this summer, you might want to pay a little bit extra to book a normal fare, or even better, use your frequent flyer miles. Almost all frequent flyer programs now allow you to book and cancel free of charge. So it's kind of like buying a refundable ticket, especially if you've been swimming in points. Use them because they give you maximum flexibility.
Is there any country that's particularly on sale right now? I mean, it sounds like Hawaii here in the States is not.
Any country on sale right now?
Right now, or has that ship sort of sailed?
No, I mean, Europe is still on sale. You know, people are not booking yet. Even, you know, Brits don't fully know where they're going to be able to travel within the EU. So now is the time to book. You know, book a cancelable hotel rate, lock in that cheap price, and then, you know, if you need to change it later, then do so. So yeah, Europe is on sale. Africa, I went on safari in Kenya and Rwanda. Great airfare deals, hotels and safaris are half off. Even renting a boat, my friends and I split last summer in Croatia. We got an amazing deal on a boat because no one was booking. So now is the time to lock in some amazing deals. Just try to book refundable or easily changeable where possible.
And you said safaris are half off, but it's an expensive trip, right? You got to get a rental car, or how does that work? For those who've never been on safari but want to take advantage of these deals.
Oh, safari is unbelievable. And Africa needs our tourism now. So much wildlife conservation comes from tourism. So it is devastating to see. There has been an increase in poaching in a lot of countries. So I am all about safe travel and going and exploring parts of the world where when you're on safari, you're socially distant. And it's usually all included. So once you get there, all your meals, your rides, everything. Safaris are my favorite type of trip. So you know, there are definitely deals out there for those intrepid travelers who, you know, will take a little bit of risk when traveling. But if you're fully vaccinated, the science tells us these vaccines are strong, even against variants. Of course, talk to your doctor, make your own personal risk decision. But I've actually had a lot of my most amazing trips over this past year, getting to go to, you know, formerly over-touristed destinations and having them to yourself.
They're like one of the weird, ironic silver linings of the pandemic, I guess, in some ways. All right, Brian Kelly, founder of The Points Guy, thanks for those tips. And coming up next, the ongoing computer chip shortage is impacting over 100 different industries, believe it or not. Our tech editor, Dan Howley, will join us to break it all down.
Yeah. Let's listen to our music. fantastic performance, really. One of my favorite popular investors. Unfortunately, I'm not with him now, but really good. Really, today is the return of many of the stocks that were suffering through really 1.5 to 2 months, really, like Boxel, BNGO, NNDM, Shift, well, Genesis up as well, Sun W, Gevo, right now IDEX, Jumia, Lemonade is 98. Was it 100 even today? Some point. So so I think I will have a quick break. I will be back at the market close. So thanks everyone for joining, and we'll see how our trade worked when we come back. Right.